Hello everyone, welcome to our Non-Farm Payrolls Day, and you're live here with me, Neil Wilson. I'm the Chief Market Analyst at Markets.com and at Finalto, and we're just going to run through this Non-Farm Payrolls session for you as it comes up. So we've got about 10 minutes to go till the number crosses, so we've got time to just delve into some of the sort of setup of where we're at the moment with these non-farm payrolls. You have to think about where the Fed is at. It's pursuing this aggressive interest rate hiking agenda as it seeks to combat inflation. And what we've seen is the market latching onto any signs that it's going to slow down. So anything in the economy, anything that sparks worries about the US economy, particularly the labour market, that has people thinking, what are we going to do next? What might the Fed do next? So we've had some weak jobs numbers this week, and that sparked a really strong rally at the start of the week. Monday, Tuesday, so the biggest two-day gain for the S&P since April 2020. Markets basically working on the assumption that bad news is good news, because bad news for the US economy means that the Fed will ease off the hiking pedal and give the market some reprieve. Heading into today's numbers then, we've got, and the markets wise, what I've got up here on the charts, if you can see, we've got euro dollar, gold, tech 100, that's the Nasdaq 100, and cable. So cable's trading at 112, gold at 1700, just about. Everything's trading a bit flattish at the moment, running into these non-farm payrolls, and we're looking to see whether or not we get a bit of a move in either direction. The consensus is 250k, roughly, somewhere around that 250 mark. So anything between sort of 200 and 300 should be pretty easy going on the market. I don't think the market's going to overread anything between those numbers. Unemployment 3.7%, sorry, and wages at plus 0.3. So that would be a slight slowdown on the year over year, down from 5.2 to 5.1 on the earnings front year over year. Average hourly earnings plus 0.3 month over month. The numbers this week from the JOLTS jobs openings figures, they were pretty soft, and that sparked a risk-on rally as markets bet that the Fed would be easing off. JOLTS down 1.1 million. We also saw yesterday's weekly unemployment claims numbers being worse than expected. And we've had the ISM manufacturing employment component hit 48.7, and that's down from 53 prior. Forexlive.com, who provide the financial commentary in the platform, have a very handy guide to all these numbers. So do check out in the platform, in the financial commentary feed in the platform, you'll be able to see all the latest Forexlive.com updates. So they'll be able to provide some analysis there as well. As we run into the numbers, we've just got a pretty flat session. Dow futures called higher at the moment. We saw a soft start for Europe at the open, but things is ticking higher. But really, we're trading either side of a flat line on the non-farm, ahead of the non-farm payrolls, and we'll be looking to see whether or not we get any kind of meaningful reaction. As I say, we've got euro dollar just at 90, just shy of 98. This is an hourly chart, so it's just at 98. Gold at 1709, failing to budge anywhere, and cable at 112. We've also got the S&P 500 at 3750 ahead of, or that's where it's been called to open. That's where the futures are pointing us at the moment. It's been a bit of a strange week in the markets. I think running into the non-farm payrolls worth assessing where we've been in terms of the bond market. We've seen a lot of volatility in the bond market, and that's persisting. The US 10-year TIPS, which is the inflation-protected security, that's an inflation-protected bond, it was up at 168 last week as all that fallout from the UK budget. Gilt yields went shooting higher. US interest rates, market interest rates, bond yields went shooting higher too. The TIPS, which is the one that really matters, inflation-protected securities. This is, so park your money there, and this is an inflation-adjusted return of 1.68%. It's not bad going when you consider all the macro uncertainty out there. What you've got is going from 168 to 138 by Monday, and we're back up at 168 again. So 30 basis point movement down and then back up in the TIPS market, and that's huge. Those are huge moves for 10-year TIPS. And we're seeing this bond market volatility is driving a lot of the price action in the stock market. So I think the question will be, do you think that the Fed is going to ease off anytime soon? Is the labour market going to get worse? Maybe, but does it ease off? We had some commentary in the morning note this morning talking about this. There's been a few Fed speakers this week. We had Loretta Mester yesterday. She was pretty unequivocal about the prospect that they need to do more. The Fed Governor Waller also, he made direct reference to the fact that there's some in the market who think that the Fed will ease off quite soon. He says, I don't bet on that. We had Raphael Bostic, the Atlanta Fed president. He cautioned that investors who are thinking that the Fed is going to start easing off because of some risks to the economy should say not so fast. There's still a long way to go. So these numbers are important because they will direct the Fed in terms of its November meeting, but I don't think it's going to direct the Fed that much because I think the Fed's pretty much made up its mind. Financial stability risks are a factor. We do need to consider these over the course as the Fed raises interest rates, but I think probably the market is going to have to accept that the Fed will be raising interest rates that bit more. So we've just got 4 minutes to go till the Nonfarms. FTSE trading at 7,020. The S&P was down 1% yesterday, but called higher this morning in the US. I think really we're just going to have to wait for these numbers. Looking to trade this, and you might be looking to go in the reverse of any initial reaction. Any sort of breakout seems a tricky one to call because it could be either side. So I would suggest that there could be a lot of volatility. Any move to the upside on the euro or cable or gold or whatever, I would think would be quickly reversed. Then we might see it rally again. And likewise, any move to the downside, you'll see an initial reaction probably and reversal, and then a new direction, deciding what to do. So be careful with stops and so on if you are trading this one. Any questions, and do drop them into the chat and we'll try and get back to you. I'm flying solo here on the camera, so I'll struggle to reply as I go, but if you drop a question into the chat, then I'll try do my best to get back to you at some point afterwards. Let's just bring up the news. So we'll get all the data coming through on our Redbox global news feed, which is always very useful. Just a quick check on the market. So we've just have a quick check at commodities. So gold at 1710. Also got Brent trading at 94, nearly $95 a barrel. Just a quick note on Brent, which is rallying quite handsomely after the OPEC move this week. It's closed above its 50-day moving average for the first time since the summer. That move, the last time it did that, it closed above its 50-day, but reversed the next day to close underneath it again. So what we're looking for today is to close above the 50-day line. It's not just 2 days above it, it's also the end of the week. So I think a bullish move here on Brent, and we'll be looking at $100 a barrel potentially should it close the week above that 50-day moving average. Cryptos, there's been another hack, I think. Bitcoin futures trading at just 20,000 at the moment. So they will also move more likely than not on the non-farm payrolls report, as they are now, very much correlated with the broader market and risk assets in general. So unfortunately not a lot happening right now. We're just playing for time really until these numbers come out. Just a quick check on the Nasdaq, which you can see here made a new low, 10,850 roughly. That's an hourly chart. So it's up at 11.5. So this 11.5 has been a level that we've seen holding before throughout the sort of early summer, throughout May, June, July. So that 11,500 level is one to watch on the Nasdaq there. So we'll keep an eye on that one if it does break that today and towards the end of the week. So we've just got a few seconds to go, 30 seconds or so to go till the numbers cross, and we'll just give you the update. Always good to refresh. There we go. And just come in. in a moment or two. So hold on, because there's going to be a move, I'm sure, in some of these markets, just as the numbers cross. And there we go, NASDAQ rallying sharply, and then reversing. There we go, very sharp rally, very sharp reversal on the NASDAQ, and it's going lower. So non-farm payrolls 263, unemployment 3.7, so all within line. 263,000 versus the 250 expected. Unemployment rate down to 3.5%. Sorry, excuse me. So unemployment rate is down. That would probably be participation rate related. But that move you're seeing the NASDAQ there. That was a classic move, and it's moved sharply higher and then reversed much deeper down to 11,350. We've got the euro off, cable off as well. It's down there towards the lows of the day, but not breaking the lows of the day yet. So lows of the day on cable down at 111 and a bit. So it's just holding that line for the moment. And gold is just a bit weaker as well. So very much a payrolls report so far that the market is saying gives the Fed plenty of cover to keep on raising rates. So no Fed pivot, therefore bad for risk assets, good for the dollar, bad for gold. We've got one analyst already. Looks like payrolls figures broadly in line with what folks were expecting, just a touch higher. So nothing too major to report from that. All I would say is that it underlines that the Fed is not going to be taking its foot off the gas. That's something that we very much believe, or that I very much believe, it's not going to be taking its foot off the hiking pedal until inflation comes under control, or until something very sizable, very important breaks in the market or in the economy. And I don't see that happening just yet. So Fed can keep on going, and that's going to mean higher bond yields. We've just got a move, 167 now. This is the 10-year tips behind me here. Just jumped up from 161.80 to 165.90, 166 now. So huge move, a very sharp move in US interest rates. So bond yields spiking on this. Keep your eyes on the UK market. UK gilts have been nudging higher and higher despite what happened with the Bank of England. They're nudging higher. That poses financial stability risks, as we know. So keep your eyes on what this move in the US bond market might mean for the UK market and for sterling as the market tries to adjust to the new budget and the new Chancellor and all the risks that have been floating around in the UK. Average hourly earnings, 5%. Bit weaker than expected. We're expected at 5.1, down from 5.2. So wages not spiraling. That's probably good news for the Fed. Participation rate, yes, down to 62.3 from 64. That's huge. So as I thought, the drop in the unemployment rate is down to the drop in the participation rate. Fewer people looking for work, fewer people wanting to work, and that is what's driving that one. So non-farm payrolls at the moment. Stocks offered on that one, gold offered, and the dollar is bid. So that's it for now. Thanks very much for joining us. Do drop us a line here in the chat, or send us an email at Markets.com, or talk to us on Twitter, whatever. Thanks for watching.